The world reserve currency is the dollar. It's collapsing against assets like the S&P index, like real estate, like gold, like art. And this is a sobering thought. If we had sound money, the dollar wouldn't collapse. But you've probably seen this chart. This is the dollar collapsing against consumer goods. Consumer goods, the dollar is 95% weaker. Means consumer goods are 20 times more expensive today than 100 years ago. Now, consumer goods are manufactured items, candy bars, bottles of water, Netflix videos. They're things that are coming off an assembly line and they're getting stamped out with a low variable cost. This is the cheapest, least scarce stuff in this civilization, and yet it's 20 times more expensive. Now, a lot of times, government officials show you this chart and they say, well, this is the impact of inflation. This, in fact, was generated by the Bureau of Labor Statistics. But the sad fact of the matter is, this is as good as it's ever going to get for you. This is a different picture. What if it wasn't easy to stamp out manufactured biscuits or Netflix videos? What if you had to do work to dig the gold out of the ground? Gold is a bit harder. And so the dollar has collapsed 99% against gold in that same 100 years, not 95%. By the way, gold is not scarce. We keep creating more gold. We get better at it, but at the end of the day, it's a bit more scarce than, Netflix videos, and it's a bit more scarce than drywall. Let's talk about something that's even more scarce. The 500 most valuable companies in the S&P. The US dollar has lost 99.8% of its value against the S&P index over that same 100 years. That is actually a closer measure to the inflation rate. This is the world's strongest currency. This is the currency backed by the country that won every war in the last 100 years. This is as good as it's going to get for you. This is as good as it gets. It will get worse. Now, how do you measure inflation? If I measure inflation against something I can manufacture for free, inflation doesn't look that high. If I measure inflation against a yardstick that is fixed, that's thermodynamically sound, then you see the true measure of inflation. S&P is one example of that. This is Miami Beach. Miami Beach runs 96 blocks. There's that much beach. 100 years ago, there was that much beach. No amount of semiconductor technology or factories make more beach. The dollar has fallen 99.8% against the beach in 100 years. That's how you start to see what's really going on with the world's strongest currency.
This is such an important context to have, is pricing things in terms of dollar, and vice versa, right? See, humans are really bad at math, intuitively, including myself for that matter, frankly. We are really bad at math. We're really bad at understanding exponential realities. And so when people go on CNBC, when people go on mainstream media, CNN or whatever, or they post articles in whatever legacy finance journal out there, when people go out there, they talk about a store of value. Oh, Bitcoin's not a store of value because it's too volatile. What they're missing is this context of what Michael is describing here, that if you're going to have a store of value, it can't have a stable price because humans are innovative. The world is not static. It is impossible to have a static form of communicating energy in a world with perpetually different forms of communicating energy. Okay, that's like telling the birds that there's a static form of energy when the nature and the dynamics of the ecosystem of the forest are always changing, right? Let's say that, let's have gold. Let's say that the value of gold stays flat, right? Because gold is relatively scarce, it's relatively finite. But the problem is, what happens when humans build more houses? What happens when humans produce more food? What happens when this year there's less cars to be made? What happens when there's less clothes to be made? When there's more or less of something in relation to something that's static, what you're going to have happen is that the purchasing power of that static thing, this gold coin in this case, is actually not static, right? And that's a problem. If you're going to have a store of value cannot be static. Okay. The volatility is inherent because volatility is an inherent part of life, right? And so, unfortunately, what the issuers of American political currency units and political currency units at large would like to have you think is that, oh, store value equals lack of volatility. It equals a constant. Okay. That's what they would like you to think. And the way that they achieve the way that they achieve having you think this is that they do have that volatility in the purchasing power of your currency, but they have it slightly down every year, right? You can't have it go slightly up. You have to have it slightly go down every single year. A 2% inflation rate. That's what's needed. You want the purchasing power of your dollar roughly to be the same this week, next week, next year. And the way that which we can manage that is to debase it a little bit, print it a little bit, make our reserve currency not like gold where it's harder and harder to get more because it's extremely energy intensive, but just produce a little bit more because it costs no energy to put another zero on the end of your ledger here. And so the point is that if you're going to have basically this competition, you have innovation, human innovation, trying to create more and more and more stuff, which is trying to force prices up, trying to increase prices. On the other hand, you have human desire to create more currency units because the more currency units you create this deception of having stable prices, and then people use it. People give you energy. They give you your real energy things for things like plastic that take no energy to produce, right? If you can give me real energy for something that looks the same but took no energy to produce, I'm a happy guy, right? And so the point is that you can't have stable prices with the store value, right? And so the choice is, do you want a store value that goes up over time, or do you want a store value that goes down over time? With the US dollar, because it goes down all the time, it forces and incentivizes saving and hoarding of energy in things like gold, in things like equities, like Michael Saylor said, in things like real estate. And that dynamic may change, right? Like Michael said, the ratio between gold and equities is vastly out of balance compared to what it was in the past. So the kind of energy might change depending on what the focus of the economy is. Right now, we have a very tech and software focused economy. That's the focus on equities. If we're going to fast forward or back to a different point in time where that focus may be on more harder or direct forms of energy, like energy companies, let's say, then maybe gold would have the higher value, right? Right now, if you compare the total market cap of tech stocks compared to the entirety of the energy sector, it's dramatic, and it's very telling of where we are in our culture, right? A very digital place. But the underlying point is the same. Humans are creating more energy. And if we're going to have a numerical system communicating the relative value of one form of energy and another, that's inherently going to be volatile as the volatility of global economics and global free market unfolds. So without further ado, let's get back to Saylor's presentation of not just why is the dollar collapsing in terms of everything else, but looking at some charts of how inferior political currencies to the dollar just keep going up and to the right forever.
Now I have some bad news for you. We're not in America. We're in another country. Foreign currencies are collapsing against the dollar. This is the Argentine peso against the dollar. In 20 years, the peso goes from 1 to 500. The peso's lost 99.8% of its value against the dollar at the same time that the dollar's lost 75% of its value against the S&P index. I'll let you do the math. If you run a company in Argentina and you're going to work hard, you're going to have to grow your revenues from 1 million pesos to 500 million pesos over 20 years to stand still. And that's why I say no amount of hard work is going to solve the problem of being on the wrong side of an economic war. There's only one strategy here. You have to get out of that peso. You have to exit. This is the lira. This is before this week. It lost 95% of its value. Now the number is about 97% of its value against the dollar. This is the rupee. It's lost 90% of its value against the dollar. So that 99.8% loss is another 90%. So we're kind of running out of numbers to calculate just how much of your wealth has gone from you to the government. When the government actually collapses the currency 99.9%, What it means is over 100 years, they in essence take all of your wealth and they redistribute it to their cronies, to whoever they want. And that's the rate at which it's going. This is Pakistan, 82% against the dollar. This is the Brazilian real, 65% against the dollar. Conclusion. If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable. Right? There are certain things that are scarce and desirable, but they don't move, like beachfront property. And by the way, maintainable, if you own $1 million of property in Miami, you have to pay $20,000 a year, every year, to maintain it, and it gets assessed up. So you have to have $1 million to cover the taxes on $1 million of property in Miami Beach over about 20 years. You can't maintain it. So you're going to be a smart investor. Here's smart investors, people bragging about making money in the stock market. The S&P index is going up 7 to 8% a year. And so you must be really smart. You invested in companies that are making good decisions. Look at the money supply. The money supply is going up at the same rate as the S&P index. And so what you begin to realize is most investment gains aren't really gains at all. All you're doing is simply tracking the monetary inflation rate if you're lucky.
Hey there, if you're considering going to a Bitcoin conference, I highly encourage you to consider Prague in June of 2024. There are lots of great Bitcoin conferences out there, but this one in Prague is one of the largest ones of them all. And there are a lot of amazing things with this conference uniquely that I think you should potentially consider. I did not go last year in full transparency, but it was only their first year, and they had an incredible lineup. Michael Saylor was there, Adam Back was there, Robert Breedlove, Stefan Rivera. Many people were there that I felt a lot of FOMO, frankly. I wished I was there. And so I'm very grateful to say that I reached out to the Prague team and I said, hey, I wanted to go to your conference last year. I didn't. I don't want to make that mistake this year. And so I am going. Very grateful to say that I am going to the Prague conference in June of 2024. So if you want to meet me, if you want to meet all the other Bitcoin speakers there, and again, they have a really great lineup coming, a lot of things they haven't even announced yet. But it's a really good opportunity. Yes, if you're in America, where you might be watching this, it's a longer flight over there, a bit more expensive travel to get there. But once you're there, you're in Europe, and things are much cheaper than they are in the US, at least in Prague. So that's something really to keep in mind, that it's probably a lot more realistic than you think. And I think it's going to be a really low noise and really high signal conference. So if you want a good place to go, consider going there. I am offering, a discount code for there, right? I am speaking there, so I do have a discount code. You can get 10% off. Actually, you can get 15% off if you pay in Bitcoin. But even if you pay in fiat, you can get 10% off. So click the link in the description. You can get 10% off your ticket. If you're going anyway, you might as well use the code. And hopefully I'll see you there. Would love to see you there and meet you before or after, the conference or whatever. So comment down below if you're going or not. Would love to meet you. So put the link in the description. Click on that to buy your ticket. And comment down below if you're going, and would love to meet up. So thanks.